US stocks are heading for a weekly rise, as is the US dollar, as the markets weigh up a hawkish tilt from the Federal Reserve, the US and Iran signing a memorandum of understanding, paving the way for the potential reopening of the Strait of Hormuz and lower oil prices. But next week, what should we be watching? To talk us through this, I'm joined by John Kicklighter, Senior Strategist and Global Head of Content. Thank you for joining us, John.
Thanks for having me.
So, John, we should be heading towards the summer doldrums, and yet there has been quite a lot going on in the markets with the Fed, SpaceX, the U.S. Iran. What are the conditions that we should be expecting for next week, and which markets will you be watching?
Sure. Market conditions are an interesting thing. I think that they have a greater influence on markets than, let's say, some of these themes or these fundamentals that we often put so much weight towards, because we often see there's a surprising event or there is a course shift in something like global growth, and it doesn't have the impact on the markets that we think it should. And I think that's because it comes market conditions first, and then we see the motivations, whether it be fundamental or technical, that follow. So when it comes to this, I think that these market conditions that we're really looking at are the expectations of seasonality, and we have that coming on very aggressively. We have the Juneteenth holiday in the U.S., so that will close. That'll make a long weekend this weekend, and then we have just one full week before we get into the Independence Day holiday week, which is historically the lowest volume week of the year when you look at something like the S&P 500. So you have a dip in activity between two known seasonal doldrums before it kicks into the long summer doldrum. And one of the things that can change these reversions to norms and quiet is anticipation, not necessarily event risk itself, but the anticipation and the possibility of major events. And with the passing of the FOMC rate decision, now we know what Fed Chairman Warsh is going to be like with a very different message. We have the memorandum of understanding, which I don't think is necessarily the end of the situation between the U.S. and Iran, but it will give us some relief. And we already have SpaceX with its major IPO behind us. And yes, it's still wildly volatile, but I don't think we necessarily have an AI anticipatory catalyst. So we've moved beyond those uncertainties, the expectations, and now we're left to just see where we're going to head. And already at record highs for benchmarks like the S&P 500 and other indices, it's going to be difficult to really gain traction in this kind of environment without a major milestone to look forward to. It's not just a momentum thing. So in those terms, with the market conditions, I think the best approach is really short term, really moving against volatility, not looking for major volatile moves. So you'll see more range trading, short term reversals, not really looking for breakouts because they're not going to be really capable of establishing follow through, which is critical for breakouts. And certainly for trends, you can look for it opportunistically for, let's say, risk-oriented discounts, so relative risks, or looking at it for something like the, let's say, U.S. dollar. We have had a significant fundamental shift, and it has potentiality under different scenarios. So, but you have to be very opportunistic with trends because we really don't have a really profound discount or opportunity alongside the lack of momentum. So markets to watch, dollar, absolutely. I mean, the dollar post-Fed is probably one of the few areas where it still has room to run, especially because there's a lot of expectation and speculation that can be unfolding over the coming weeks. I like the pairs, dollar yen in particular. I think there's going to be intervention there. Euro USD and dollar CAD, major currency crosses with some really significant technical and fundamental backing behind them. I'll be watching the US 2-year Treasury yields and the Treasury yield spectrum just broadly. I'll be watching relative risk benchmarks like the Nasdaq versus the Dow. And of course, looking at the implied volatility, so the VIX, to see how the markets are operating with these seasonal conditions. And of course, seeing how far we have a retreat in energy prices, so WTI, Brent, natural gas, and the energy complex.
Now, as far as themes are concerned, we briefly touched as the Fed, US and Iran. Are these still relevant? What are the themes you'll be watching for next week?
I think that these themes are probably downshifting significantly. The Fed speculation, especially in the coming week, might have a little bit of interest because we have the PCE deflator. But if you're looking at the U.S. Iran, I mean, now that they have this MOU, which a lot of people are going to dig into and they're going to criticize, and rightfully so, they're just going to leave it alone. They're not going to want to kick it off again because they're looking for off ramps both sides. So we might not get the 60 days before this kicks back up again, but it's probably going to last at least a couple of weeks, if not longer. So that's going to be behind us. And you will see, I guess, AI is starting to gain a little bit more traction with the SOX, the PHLX semiconductor index, pushing a new record high. Obviously, there's going to be headlines around that because they're trying to whip up a frenzy, trying to get their IPO dollars out of the market, the subsequent listings. But I don't think it's really going to catch a lot of traction with the lack of momentum and the lack of liquidity that we're going to have in these markets. So it's probably going to be kind of dead in terms of momentum and its capacity to build across risk-based assets. More likely, we're going to shift into longer-term considerations like growth, and obviously monetary policy is much more interesting now. But these are going to take time to develop, and it's not going to be the immediate catalyst that people are looking for if you're really seeking volatility to clear out some technical resistance or what have you. So in terms of the traditional themes, I think there's probably a medium-term capacity for it to impact markets, really isolated in certain areas. You look at growth through PMIs, you might have some inflation. Again, the US, Canada, Tokyo are going to offer some inflation figures, and that's going to weigh into monetary policy. And I'll also be watching oil inventories because obviously that still has to play out as a downstream effect. Even if the Hormuz were to fully open, we still have downstream effects, and we have to see those play out.
And then finally, turning our attention to event risk. I mean, you did briefly mention core PCE, but what events are there and what days which you'll be watching?
Sure. Monday is relatively quiet, so we're coming off the long holiday weekend. The PBOC is probably going to hold its benchmark rates again. It has been pretty consistent there, and it's relatively dovish given the structure of its economy. Eurozone consumer confidence, Canadian inflation CPI, noteworthy releases and worthy of watching. Market moving, I don't know. Tuesday, probably the most thematic. That's where we get all the PMIs, Australia, Japan, Eurozone, UK, US. That's a good timely update and proxy for GDP to see where we're at as we come out of the Strait of Hormuz closure. And seeing if we're on a positive or negative trajectory. I'll also be watching the API oil inventory figures, and I'll watch FedEx, which actually will release its earnings because I want to see how trade conditions are doing. That logistics firm is a very good reflection of that. Wednesday, we have the BOJ opinions. You have German IFO business consumer confidence. You have Brazilian consumer confidence, some sentiment figures there. The EIA oil inventories in the US hours. Also, the Fed stress test is going to be coming out for the banks. I don't think that anybody's going to really fail or they're really going to flag any major issues because they don't want to cause themselves problems. But I think in Wednesday, I'll really be watching Micron Technologies with its earnings coming out. It's a number 10 market cap stock, and it obviously has a relation to AI. So definitely one to watch. Thursday, Aussie jobs, Aussie spending. The US PCE deflator is the big event for that day, though, in the US session. Spending, income also come with that data. It's a little lagging, but nevertheless, something to watch. We'll see if these are still important figures for the Fed going forward with Kevin Warsh really putting his task force to see if the data is still relevant and timely. Durable goods orders and the Mexican Central Bank is expected to hold benchmark rates. And Friday, we have Japanese or Tokyo CPI, retail sales. The Bank of Japan is going to be buying JGBs, and I do think that there is a very high probability that they intervene once again as the dollar yen climbs higher and higher. So that's going to be something to watch if they do it around event risk or not. Brazilian fixed direct investment. We also have jobs figures out of Brazil, Mexican and U.S. trade balance, and the final reading of the University of Michigan Consumer Confidence Report is going to be worthwhile because we want to see as the further data came in towards the end of the month, if it changed that very dramatically low reading any.
Well, thank you very much for your analysis once again, John.
Thank you.
For more videos like this, please do like and subscribe.